I'm Lynn Prowse-Bishop, and this is the Virtual Business Show. In today's episode, we're going to be looking at two issues that could potentially affect some VAs: the single-touch payroll system and the potential that clients may need to cover superannuation. Two separate issues which we're going to discuss separately. Given that I'm no expert on either of these topics, I've invited my amazing accountant, Pauline Pickering, to the show for her expert opinion. Thanks for agreeing to chat with me, Pauline.
You are very welcome, Lynn.
Now, I'll start with an introduction. Pauline is the Director of Globe Accounting, which opened its doors in 2004. She has a Bachelor of Business and is a certified practicing accountant. She has over 27 years' experience in business structure planning, management accounting, taxation, and self-managed superannuation funds. And she has a particular passion for small business accounting. I've been in business nearly 20 years, and I have to say finding Pauline and her expertise was a godsend for my practice. Again, thanks so much for taking the time out of what is a very busy time of year for you to talk to me about these two issues.
No problems at all.
Okay, so before we get started, I should point out two very important things. First, this episode is for our Australian listeners and the rules that pertain to them. Second, please get your own advice. Everyone's situation and circumstances are different, so it's important that you find yourself an accountant who understands your unique circumstances and how these rules will apply to you. So with that out of the way, let's dive in, and we'll actually start with the single touch payroll system. I found out about this when my partner brought home a notice from his employer that he wouldn't be receiving a payment summary or group certificate at the end of the financial year because his employer has registered for the single touch payroll system. And so he either has to get it from his MyGov account or our tax agent can do it. I looked it up, and I'll include a link to the ATO website so that you can have a look for yourselves. But basically, if I'm understanding it correctly, any employer with more than 20 employees is required to have the STP system in place already. And those with fewer employees need to be in the system for the 2020 financial year. That's right, isn't it, Pauline?
That's correct, Lynn. And the ATO have just given an extension for those small businesses with under 20 employees until the 1st of October 19. So the message is, and this won't affect most of the people listening clearly to your podcast, but if it does, don't panic. You've got until the end of October 2019, and the ATO have said they won't penalise people if it takes them a little while. So really, 30th of June 2020 for businesses that do fall into these rules is really the key date. So yes, but we've got a bit of time.
Excellent. Okay, well, obviously what we're wanting to focus on are VAs, and generally speaking, the majority of VAs are sole operators. So I want to look at the rules sort of for them specifically. Now, some of them will have set themselves up so that their business pays them a wage. Others simply take drawings and don't pay themselves a wage. Others might have family members who help them from time to time and who they pay. So I'm guessing that those who pay themselves a wage or those who have got family helping out who they pay will fall within the closely held payee category and therefore eventually will need to be part of the STP system as opposed to VAs who take drawings and don't pay themselves a wage. So Pauline, can you shed some more light on that specifically? Is that correct? Will VAs who pay themselves a wage or those with family that they then pay be affected by these STP rules?
Yes, that's correct, Lynn. So it's important to work out whether what you're paying yourself is, as you say, a drawing or a wage. Now, if you're a sole trader or a partnership, you are ineligible under the legislation to pay yourself a wage. What you pull out of your business each week is a drawing. It's not a wage, and you can't even if you wanted to, you can't say that it is. So this doesn't apply to sole traders or those in a partnership. Having said that, as you say, if they do have children that they have on the payroll, then these rules will apply. There is a specific carve-out in the legislation, not only for the small businesses, as I've explained to you before, that need to come in shortly, but there's a 12-month extension for closely held entities. So in other words, if you have a business and you do pay wages and you're in the system and the only employees you have are closely held, i.e. family members, so yourself, your children, your parents, then you have an exemption until the 1st of July 2020 at this stage. That may well be extended, but we have a carve out at this point, 12 months for those people. So you are not required to be in the single touch payroll system until the 30th of June or the 1st of July, 2020.
Great. So basically, just to clarify again, if you're taking drawings from your business, you don't need to worry. But if you're paying yourself a wage or family members who you're paying, then you will have those responsibilities at some point.
Correct. You will have a problem and when I say a problem, you will have the liability or the compliance requirement on the 1st of July 2020. If you are just pulling drawings, you will never be in the system because you're not paying yourself a wage, and these rules won't apply to you.
Great. Okay. Thank you so much for clarifying that. Now, if you do need to comply with the new payroll reporting system, there are now a few options available for you to use, with many software vendors already having introduced STP compliance software. And Pauline's company very graciously sent me a list of some of the systems that they have checked out. And I will include some of those links for you on the podcast site. But if you think that you may be affected, be sure to speak to your accountant about your obligations. So
great advice.
Thank you. So, okay, and thank you for yours. This is great. So, okay, let's move on to the next topic of superannuation. Now, this one's probably going to be a little bit more complex. One of the benefits, obviously, of using a VA, and one that we often use to promote our services to clients over in-house staff, is the savings that clients make with respect to things like training, equipment, and on costs like superannuation. However, I was reading a blog post from a VA the other day that said, in part, under the superannuation rules, if you earn $450 from one client in a calendar month, the business is legally obliged to pay the standard rate of super. Now, we'll go into this a little bit more, Pauline, but first up, I've actually never heard that figure before. And is that figure correct, $450 a month?
Yes, it is, Lynn, but it is rather oversimplifying things. At this point in time, if you have an employee, and we're clearly going to talk about what constitutes an employee, and you pay them more than $450 in any calendar month and they are over 18 years of age, then they may fall within the super system.
Great. Okay, so the figure's correct. So now we've got to sort of dig a little bit deeper into these definitions. So
correct.
The example that was given on this particular blog post I was looking at is of, and it was taken from the ATO site, so it is of a girl who was providing administrative services and telephone answering to a caravan park. She was paid an hourly rate for her labour, which she invoiced weekly. She had an ABN, and the contract stipulated that she must perform the work personally. Now, according to the ATO website, she was deemed to be an employee for super purposes because the contract is wholly for the labour and skills that she provides. She performs the work personally, and she's paid according to the number of hours worked. On a different page of the ATO site, it also states that if you're a contractor, you may still be entitled to superannuation from your employer if you're paid wholly or principally for your labour. And the contract may be considered wholly or principally for labour if you're paid wholly or principally for your personal labour and skills, you perform the contract work personally, and you're paid for hours worked rather than to achieve a result. Now, obviously, this sounds very much like it applies to virtual assistants who are paid for their skills, often hourly, and they're paid for the hours worked. So it's not surprising there's a little bit of confusion. We should point out here that the ATO also says that the contract must be between the individual and the client and not through a company, trust or partnership. So does that mean that VAs who operate under those business structures won't find themselves with this issue around the superannuation guarantee?
Absolutely, Lynn. And one of our business structure pieces that we do in the office is to ensure that potential issues around this trade through a company, trust or partnership to avoid that. So that's an accurate statement. If you're structured through a company, trust or partnership, these rules do not apply.
Okay, great. So here we're going to naturally then be talking about individuals with a sole operator business structure. So if you have any of those other structures that you're running your VA practice as, company, trust or partnership, breathe a sigh of relief. You now can not worry about listening to the rest. It's only about people who are running their business as a sole operator. In the example we just gave, I would argue that the girl who they are referring to fails some of the other contractor tests. So specifically, she is contractually obliged to perform the work personally. So under that test, she would be deemed an employee for tax and super purposes and qualify for super because she is the one that has to do the work. Now, in my research, I noticed that the ATO website also provides additional tests, factors which, when taken together, determine whether a worker is an employee or a contractor for tax and super purposes. And I'll provide a link to that particular table on the podcast page as well. And I think what's confusing the situation here is the term contractor. So there are contractors. Everybody knows there's lots of different contractors, electricians, carpenters, for example. But there are then also independent contractors. And I would argue that virtual assistants tend to fall within that latter category. So Self-Employed Australia, who were formerly known as Independent Contractors Australia, a few years ago identified over 20 tests that can be applied to determine independence of a contractor. And the ATO site lists just 6 of them, which, when taken together, determine whether a worker is an employee or a contractor. So they will cover things like the ability of the contractor to subcontract or delegate work, the basis of payment, equipment, tools and other assets, commercial risks, which means that if you're a contractor, you take the commercial risk with you being legally responsible for the work and liable for rectifying anything, control over the work, and independence. And they talk about independence in this particular table as a worker isn't operating independently of the business. They work within and are considered part of the business, but a contractor operates their own business and performs services as specified in their contract or agreement and free to accept or refuse additional work. Now, if we look at those 6 things with respect to our example, we can see that the lady who was employed there arguably fails many of the independent contractor tests. And the first on the ATO list is that the contractor can delegate work, which in our example, she can't. Her contract prevents her specifically from delegating the work to others. She isn't operating her business independently of the caravan park. We can assume she's on site using his equipment and working within and considered a part of his business because she's also answering phones. And the caravan park is legally responsible for the work that she is doing. So naturally, she's going to be deemed an employee. According to the ATO, you can still be independent and be paid an hourly rate for your labour. So being paid an hourly rate for your work isn't the primary test of contractor versus employee. And there are more tests to be passed than just the 3 that have been mentioned above to determine that independence. So bearing all that in mind then, on this basis, if a VA has a contract with a client that stipulates they can delegate the work, they're using their own equipment, they're legally responsible for their work and liable for the cost of rectification, and the VA can accept or refuse additional work, even if they quote on the basis of an hourly rate, they would be deemed a contractor for superannuation purposes, and the client is therefore not liable for super, even if they're paid more than $450 in 1 month. Is that correct?
That's right, Lynn, and it's important to know that the tax office will look at this on a case-by-case basis. So anytime you read any of the fact sheets or things put out by the ATO, they will say there is no one indicator. They look at it as a case overall, so they will look at all of those indicators. Clearly, if you are charging an hourly rate and if you muck up the job and you go back and are paid a second time to fix the job, you are more likely to be an employee than a contractor. So a really good way that I use the calculator or the indicator or the decision tool, I think they call it, that you will put on your blog site. And I like to work my way through that and say, who do you pay for the work? So if it's an individual, then you're more likely to be, you may be an employee. If you're a partnership, company or trust, not. Does the sole trader have an ABN? Yes, and you will need to put that ABN in. When you follow the decision tool, they'll actually ask you for the ABN. So the ATO kind of have an inbuilt check as well. So that's helpful. Is there a written agreement between the employer and employee or the business and the contractor? So if it's a set amount per period, if you get $1,000 a week to turn up and do your job and go home, then you're far more likely to be an employee. If you were paid so much per report or even so much an hour to do that job, but as you say, if you can delegate that job to someone and it's not specifically you, then that business is actually contracting or engaging your business to get that work done, and they don't really care how it's done, then clearly you're far more likely to be a contractor. If you have to rectify any issues on your own time and in your own money, far likely to be a contractor. So the tax office will look at all of these on a case by case. And given what you said, if I go back to the example that you used, if you are based in your own home office, if you are using your own equipment, if you are legally responsible for your work, if you have to fix it at your own cost, if there is any mistakes, if you can actually delegate and say, okay, this report will be done, but not necessarily by you, if you can accept or refuse additional work, then yes, my understanding is on those particular grounds, you would absolutely be deemed to be a contractor for super purposes and not liable for super, even if you're paid more than $450. And can I just add one thing? Bear in mind that if you are deemed as an employee, the tax office clearly say you can be a contractor and still, so you can still, pay tax as a sole trader and use your ABN. You don't need to be an employee. It's just that if you come within that category, then the business that is engaging you needs to cover you for super and work cover. So being a contractor isn't the issue. It's just, whether you need to be covered for super. But the one comment I wanted to make is if super is applicable, then work cover is as well. Mm-hmm. So it's not just super. Super and work cover will go hand in hand. But back to your original question, I agree with you. On the basis of all of those things that you've told me, it seems likely that if that's the structure that you're using, then you would not be required to be covered for super.
Right, great. And yes, as you mentioned, work cover as well is something that then becomes an issue. And that is one topic that I don't want to get into because I know it's state-based, and so there are different rules for every state, and I would need to get 15,000 people in here to talk about the individual things. So thank you for mentioning that. Yeah.
So just flag that issue, that's one more thing to think about. But it's definitely on a case-by-case basis, and clearly, as you said before, each VA that may particularly be caught within this issue should absolutely talk to their accountant and just run and use the decision tool. It's actually quite helpful. And what I find is if you go back and answer a question and get one response from the decision tool, go back and put in a different answer to the question and see the result you get. And by working your way through that decision tool, it really gives you a feel for where the tax office are coming from and what they would consider to be an employee for super purposes and what they consider would be a contractor. So by having a fiddle with that decision tool, you absolutely get a feel for where the tax office intent is in this legislation.
Mm-hmm. And look, thank you for mentioning those. I will actually put those links to those decision tools on the podcast page. Again, there is one for superannuation. There's another one for determining contractor versus employee. And again, as we mentioned at the outset, this only applies to sole operators. If your business is structured as a partnership, trust or company, then obviously these little grey areas around super and independence don't apply to you. So Pauline, look, thank you again for your time and sharing your insights. If people want to get in touch, you have got a website and a Facebook page. Do you want to share those?
Sure, we do. Thanks, Lynn. So just www.globeaccounting.com.au finds my website, but we also have a Facebook page, and what I usually use that for is if there's any legislation or any last minute or anything that's happening in a change of legislation, I put that on. So it's probably quite handy to like that page, and just in case there's any dates or any changes coming in that are helpful.
Excellent. Thank you. Well, look, I'll also include the links for the Facebook page and the website on the podcast page, so you'll be able to access it directly from there. Thank you again, Pauline, for sharing your knowledge and insights with us. I appreciate your time so much, particularly at this time of year.
No problems at all. You're very welcome. Yes, it's clearly our busiest time of the year. We're ramping up for July, but June is my busiest month. But you're more than welcome. It's an important topic, and people really need to think about it just to make sure they're compliant.
Thank you so much. Well, look, don't forget to check out the links that I'll be including on the podcast page regarding single touch payroll system and the ATO links with regard to contractors. And again, as stated at the outset, please do get your own advice, as everyone's circumstances are different and you need to ensure that you decide what to do based on your individual situation. I'm Lynn Prowse-Bishop. Thanks so much for listening.